Good morning and welcome to Charting the Markets on Thursday, the 22nd of June 2023. Today we have a full economic calendar ahead of us, and at 12 p.m. UK time we've got the Bank of England, and it will tell us whether it is going to hike its rates by another 25 basis points or perhaps even 50 basis points, as about 50% of economists now seem to expect, since yesterday's much higher than expected UK inflation data. And basically this would take us to 5% if we were to see a 50 basis point rate hike in the UK, with the possibility of seeing further rate hikes by the end of this year, taking us to 6%. Now we can analyze the impact of that later on and see what that also does to the FTSE 100 in the short term. But let's continue because at 1:30 p.m. we've got initial jobless claims out of the US, and then more importantly, in the US at 3 p.m. we also have Jerome Powell's testimony to Congress, and there, like he did yesterday, he will tell us what the potential outlook is with regards to the Federal Reserve and it hiking its rates further. At 3 p.m. we also in Europe have the Eurozone Consumer Confidence Sentiment Index out. So let's begin by having a look at the UK. As I said, the Bank of England is going to probably hike its rates for a 13th time today. The question is whether it's going to be by 25 or 50 basis points. And if we look at the FTSE 100, either way, it doesn't really like what's going on. And as you can see here, we've been coming off for the last 4 days. And interestingly enough, from a technical perspective, I already said so on Friday, and again, I reiterated that on Monday's Charting the Market, that for me, the FTSE was looking bearish, and the reason from a technical perspective was that on Friday we tried to break through this previous resistance area between 7,655 and 7,679, the mid-May low and early June high, but failed on this chart here and formed a shooting star here on the candlestick chart, which was then followed by the decline we've seen, taking us back down again towards the May low at 7,433. So the FTSE 100 is really continuing to underperform its European peers and actually all major markets around the globe. And this is probably to do with the fact that it doesn't contain any tech stocks and is very heavily geared towards commodity stocks, and with commodities not really performing that much recently, it is taking the brunt, as you can see here. So technically speaking, unless we now hold at today's low at 7,457 and manage to heave ourselves back up again above the red line here, above the 200-day simple moving average at 7,552, we are likely to continue to head back down again. So only if we were to rise today and close above 7,552 and then tomorrow see some follow through to the upside, could we retest not just the April to June downtrend line, but also this key resistance area that I mentioned since last week. But as I say, provided that resistance area actually caps, further downside is, for me, technically speaking, in store for the FTSE 100. Moving on to Germany, what we've seen here is also very interesting, because Germany surged ahead last week to a new record all-time high on this daily financial bet here at 16,428, but since then has actually had so far 4 consecutive days of falling prices, taking it down to the 55-day simple moving average here in orange at 15,944, around which we are currently trading. So basically in the last 4 days, we have taken out nearly the last 2 weeks of gains. And this is technically significant because not only did we see negative divergence as the new all-time record high, and what I mean by that is that, can you see here, the high we made last week at 16,428 is marginally higher than the May high at 16,333. But if you look at the relative strength index, the oscillator on the lower end of my chart here, you can see that the high, which corresponds with last week's high, is below the high seen in May. So here the oscillator is turning down whilst the market made a new high. That is telling us that the odds are pretty high, about 70%, that there is some future weakness going to happen in that chart, and this is exactly what is taking shape since then, with the DAX 40 falling quite rapidly. Now, from a medium-term perspective, there isn't any danger yet. But as I mentioned since the beginning of this week, if we were to continue to fall, and if we were to fall through the May and June lows seen here between 15,625 and 15,659, then we could form a major top. And that could then take us all the way back down again towards the 200-day simply moving average of 14,755. So watch this space in the days and weeks ahead, because this support here is really, really critical for the DAX 40. As long as it holds, what we're seeing is just a correction in a longer term uptrend, which is just something that markets do, especially over the summer months. So it's nothing to worry about per se, but just watch out for those key support levels with regards to the medium-term trend in the days and weeks ahead. And the story is quite similar with regards to the Nasdaq 100. I mean, the Nasdaq has been the greatest outperformer this year so far, rising very rapidly, nearly to 25%, I believe, and forming this high, which was to levels last seen in April of 2022 at 15,283. But even here, on the back of Jerome Powell's testimony to US Congress yesterday, and him basically reiterating the hawkish stance of the Federal Reserve, even though he did say that the Fed would have to look at the data and perhaps slow down the pace of rate hikes, he did remain hawkish. And that basically led to risk-off sentiment, as you can see here, taking the Nasdaq 100 through its May to June uptrend line for the first time in about 2 months. And we'll have to see whether today, because right now we're just in the overnight session, whether today we can close below that. If so, short term it would be relatively negative, and that would mean we would probably retest the late May high at 14,530. Here, the support to look for is basically the late May and current June lows, which take us back down towards, let me just have a look here exactly, 14,209 on this daily financial bed. So basically what I'm saying is, if we were to slide through 14,209 on a daily chart closing basis, then a top could be formed. Right now, it's just a consolidation phase, a correction in a very healthy uptrend. Jerome Powell's speech yesterday in front of the US Senate Banking Committee has led to a fall in the US dollar. Even though he basically continued to talk about a hawkish stance to do with further rate hikes by the Federal Reserve, but he did say that there might be a slowdown in those rate hikes. And on that, the US dollar depreciated quite rapidly, pushing euro dollar, the inverse here, much higher. And for the first time now since mid-May, we are trading back at the psychological 110 mark with regards to euro dollar. And you can see here the uptrend is very healthy. We've had another surge higher yesterday, and now the next upside targets are the 10th of May high at 110.07, and then the 8th of May high at 110.53, and then above there you've got this key resistance area between the mid and late April highs between 110.75 and 95. So this is what we're aiming at right now with regards to euro dollar. Further upside in store, and basically provided for me from a technical perspective, we stay above this Tuesday's low. As you can see here, we made a small doji pattern here where the open and close is more or less at the same level on this daily chart, just above the orange line here, the 55-day simple moving average at 108.87. So basically, provided we stay below that last reaction low, a reaction low is nothing else than a low which is lower than the one to the left and to the right on these candles. And this one here was made at 108.93. So provided we stay above 108.93, further upside should take us towards this key resistance area with regards to euro dollar. Now, the British pound is very interesting because despite yesterday's much stronger than expected UK inflation reading at 8.7% for May, and also core inflation hitting levels last traded back in March of 1992 at 7.1%. Despite that, the exchange rate with regards to the British pound versus the US dollar actually declined short term before regaining some ground on those hawkish comments by the Fed Chair Jerome Powell, and on the weaker US dollar, basically propping cable here, the British pound against the US dollar up again. And you can see that we basically retested the June uptrend line yesterday, tested it exactly, bounced off it, and today we are now grinding high again ahead of the 12 o'clock rate decision by the Bank of England, where now, since yesterday's higher than expected inflation reading, about 50% of economists expect a 50 basis point rate hike. In that case, we would be hitting 5% with regards to the base rate in the United Kingdom. It would be the 13th rate hike we've seen so far in this hiking cycle. So interesting to see whether we'll see 25 basis points or 50 basis points later on at 12 o'clock. Either way, from a technical perspective, provided we stay above yesterday's low at 126.92 on cable, further upside should be seen and take us back above the mid-June high at 128.48 towards the 130 area. But if we were to fall through 126.92, then we could perhaps retest the May high 126.79 and maybe slip back all the way down towards the mid-April, early June highs between 125.99 and 44. But right now, the trend is your friend and it is pointing higher. Overnight in Japan, we had the Bank of Japan Governor Kazuo Ueda also basically talk about the Bank of Japan's still dovish stance, and that led to dollar-yen short-term coming off versus the US dollar. Also, the testimony by Jerome Powell at the US Congress and the US basically, the Fed sticking to its hawkish stance led to some volatility intraday, taking us to 142 yen and 37 sen. And if I move out onto a weekly chart, taking us back to levels last seen in November of 2022. And here, if you can see, we have been rising on that interest rate differential and future outlook with regards to the hawkish stance of the Fed and the still dovish stance of the Bank of Japan. The currency pair has risen from 129.65 back in March actually, to the current high 142.37. If that would be to be taken out, then we would be heading towards 145 yen in the next few days and weeks. Now here, short-term support is at Tuesday's low at 141.22, and below there we've got the May to June uptrend line at 140.64, and also the late May high at 140.93 as potential support. But again, even though we're slowing down with regards to the upside here, the trend is still pointing higher for dollar-yen. The price of Brent crude oil is creeping back up again as hopes of an improving economy is pushing the oil price higher, and as the potential demand out of China could perhaps pick up again. But at the end of the day, if you look at this chart on Brent crude oil, you can see that we are just trading within a sideways trading range here. And it really flips between these extremes, between $78.52 on the upside and $71.40 on the downside. Basically, the highs seen since and lows early May. And it sort of goes up a bit, goes down a bit. We're just trading sideways. But the push at the moment is to take us back up again towards the 1 month resistance line and also the orange line here, the 55-day simply moving average between $77.66 and 70 cents. So that's where we are at the moment. If we fail there once again, as we have done 3 times in a row since early May, perhaps we could slide back down again towards the May and June lows around the $71 mark. But if we were to finally break through these levels I've just mentioned at $77.70, we could then retest the May and June highs between $78.17 and 52 cents. But let's see what happens with regards to that in the days ahead. Right now, there's not much really going on with regards to the price of crude oil. Moving on to copper. Copper has been really interesting of late. The price of copper has been rising from its May low at $7,867 per ton and is now actually taking out all of my levels here, so I need to remove that high here. And we are currently testing the early April low that is at 8,666. And if we were to manage to rise above there, we could then be heading back up again towards the late March and April highs between $9,094 and $9,182. So right now, as you can see here, we've had literally since the middle of June only positive closes here, more or less, on the copper price. So copper rising again on hopes that maybe the global economy is not doing as badly as was feared a few weeks ago. Moving on to natural gas, and what we've seen here is also very interesting. Let me just make this chart a little bit clearer to read. What we've seen here is over the course of last week, a very sharp acceleration to the upside on worries that the supply to Europe with regards to natural gas could not be met by demand from the top exporter, Norway, as it had some output issues. And that basically took us to $2.76 earlier this week, to marginally below the May high at $2.78. And since then, the production in Norway has been ramped up again, apparently, but we so far dropped to $2.51 and are now heading back up again towards that resistance area I just mentioned, between $2.76 and 78 cents. Now, interestingly enough, here we've also been trading in a sideways trading range, but if the next upside target would be the psychological $3 mark, and then also the March high at $3.05. So, provided we stay above yesterday's low at $2.51, further upside looks to be likely with regards to the price of natural gas. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is AxelR_IG.